We're going to cover my exact entry model and how I perform my analysis and my executions. So we're going to strip back these charts for some clarity to go over how I start my analysis. So I, of course, always start my analysis with basic SMC concepts. I start on a higher time frame. I'm very in tune with how the daily and the weekly and the monthly chart look at all times. And those are obviously incredibly bullish right now, right? Our weekly chart looks like a rocket ship. So on the daily time frame, same deal, incredibly bullish. 4-hour chart, we did have some bearish price action over, this week. Although tonight we have been absolutely ripping at open. We created new all-time highs. So let me shift those. We actually have pumped even higher since I marked that roughly 20 minutes ago. We had swept the previous high of day. I like to pay attention to the previous session's high and the previous session's low. We constantly are sweeping out liquidity inside those ranges. All right, so on the 4-hour time frame, we are disrespecting bearish PD arrays, and we are respecting bullish PD arrays. Well, not really. We haven't really tapped. We did tap into a bullish PD array down here. So we have a bullish 4-hour fair value gap that we rejected off on Tuesday. We then have this looks like an optimal trade entry scenario that panned out over a roughly 2-day period. And here we go. So we are most likely going to complete the cycle or roughly see the end of the cycle somewhere in this range. But my exact method of analysis and how I construct my charts, and then we will go into my entry model. So I'm not so much paying attention to these down here. I'm more so on a 4-hour time frame paying attention to these, unless I notice we have this is called a CVD divergence created. That will let me know that that session or that next 4-hour candlestick is likely to be in a reversing in the opposing direction candle. All right, so we bearish CVD divergence, bear run, bearish CVD divergence, short run, bearish CVD divergence, short run. Okay, moving on, and we will go over what those are. I will strip down lower time frames and lower time frames until I get clarity. And here we are now looking at the 1-hour time frame, right? I've marked out Wednesday's low of day, Tuesday's low of day, and the New York closing price from this session today on Wednesday. Now I'm heading into my 30-minute time frame, and I see since open at 6 p.m., we had this rocket ship of a candle within 30 minutes. We covered almost 200, over 270 points. We moved about 300 points. That is pretty wild. Huge move, especially prior to Asian session. I would expect a move like that during Asia or London or New York, one of my primary trading sessions. All right, so inside that move, we swept today's high of day between all 3 sessions, and we created new all-time highs. All right, but we also, during this expansion, left a massive, unmitigated 30-minute bullish fair value gap paired with a pretty mammoth breaker block. If you like rejection blocks, that's perfectly fine. Right here, EQ lines up perfectly. So let me shade this one a different color and mark that RB for rejection block, right? On the 30-minute. Okay. The only line that I use for an indicator on my charts is the volume weighted average profile. My settings for this, I'll be happy to share. When you download that exact indicator on TradingView, I shut off all of this stuff. It essentially puts Bollinger Bands on there for you. I don't use those in my daily trading habits. I just pick my preferred color for the chart VWAP line. That's the only line indicator that I use. I don't believe in SMAs and EMAs to be accurate for taking trades. So moving forward, another thing that we all use in SMC concepts and ICT teachings within our analysis is SMTs, right? So I do use SMTs, and you'll notice on my charts, those are going to be black for bearish SMTs, and they will mark the asset that we had the SMT with. So in this case, it was the S&P, and they'll be blue for bullish on either the S&P or the Dow. And then you'll also notice that I have these green and red highlighted areas that are marking out CVD divergences. So I like both of these within my analysis because I think that they both hold true. A lot of times they show buyer and seller exhaustion in key levels of reversal. Bullish SMT, CVD divergence, bull run. Bearish CVD divergence, short run, choppy but light, but either way, that's still a decent little short run. This was 100 points. Same thing, bullish SMTs indicating we're going to have a bull run at the end of the day up to London highs. Bearish SMT ran right down to VWAP. And also, we're going to get into how price is constantly tagging the point of control. My page's name and my Discord's name are not a coincidence. Speaking of that, the QR code on the right-hand side, if you guys do want to join the Discord, I'm on there live trading regularly, completely free. You can feel free, please join up. I post daily analysis. I have a trader's toolkit with all the resources that I use in my day-to-day trading, our trading playbook. And there's a ton of free resources. It is a small community, but growing. And we have live news getting streamed in. You can give me suggestions for what you would like to see in weekly sessions so I can help you advance and progress as a trader. So back to live trading. My next thing that I incorporate into my analysis is session volume profiles. Okay, and I do have an entire video on what is a volume profile. If you're not familiar with that, I would suggest that you probably stop here and go watch that and then come back and revisit this. So we have the session volume profile. In that one, we go over low volume nodes, the point of control, the value area high, value area low, right? And we notice how price constantly is trying to balance itself and seek efficiency. The point of control is a target that I like to use for a lot of my trades. I look for rejections at value area highs, value area highs, value area lows, and I like trades to the session point of control or a previous session point of control based on my analysis. I also incorporate pivot points within my analysis. If you notice right here, rejection at this pivot, rejection at this pivot. Price came up, and we don't have any good examples of price rejecting this pivot or this lower pivot. Those are very deep discount digs. I primarily trade off of these first initial pivots. I can grab very large moves. And to map this, I place both ranges on the value area high and the value area low. I will show you my settings for this. You can pause the video and copy all my settings if you would like. I'm very transparent. I want to help you advance. So those are my settings for those. I don't necessarily always whip that out. Sometimes during the session, things are moving so quickly that I'm just targeting the point of control. I see my confluences and I'm good to rock, right? So we will get into my entry model. Here we have an unmitigated point of control. This would be my next target for a draw on liquidity. Directly below that, we have got ourselves the value area low of the current volume session profile. We have a rejection block large rejection block, 30-minute. That perfect, excuse me, the EQ of the rejection block perfectly pairs up with the equilibrium of this 30-minute bullish fair value gap, which is also present that we mapped in our initial analysis. So we are currently, I think it's pretty obvious that we are bullish. I would like to, we are in a premium though, so I would entertain shorts back to the point of control to mitigate this 30-minute gap, or I would look for continuation longs out of this area of interest. Okay. Back to a value area high or a pivot. We have the volume weighted average price resting. The volume weighted average price to adjusts itself by how much price action you are displaying on the screen. If I zoom in to only this current price leg, which a lot of the times to get an accurate reading, I like to just have the current leg within the time frame. And look at that. It pairs up directly in the rejection block and inside of the bullish fair value gap. That tells me we are super premium. If you have followed the teachings of ICT and you're very familiar with it, then you will know we are all taught, and it holds to be true, that price is constantly seeking external range liquidity and then internal range liquidity. External range, internal, external, internal. So we mitigate gaps, so on and so forth. And internal liquidity is going to be resting at, these are what we're taught in this ICT. I trade order flow primarily now, but I use SMC concepts in my analysis. Liquidity is resting around these areas and in these areas, not exactly in these ranges. Obviously, the depth of market will show you where liquidity rests, and the point of control is usually my target because that is a pretty guaranteed location where traders have entered positions and have break evens in place, stop losses at their original entry point or a stop loss just below, so on and so forth. Right at the point of control, there is a ton of liquidity resting. So I mark out, I believe I already went over this, low of days, high of days, like we had swept at the market open at 6 p.m. We pumped up, we swept the previous high of day and created new all-time highs, right? So I would start top down, 4 hour, 1 hour, 30 minute, 15 minute. And then I'm usually monitoring the 5. And I get for, so right here, we have down here, these are CVD charts, right? Cumulative volume delta. And these work in a similar fashion to, I have an SMT indicator here present, that these blue tags are SMT divergences. And I'm sorry if I'm repeating myself. I already recorded like almost all of this, but then realized I wasn't live and I was talking to myself. So if I'm repeating myself, I'm sorry. I'll do it quickly. This is an indicator that I use by Lux Algo. These are my settings. And it is tracking SMT divergences between the S&P and the Dow, right? And these are great indicators to let you know when either the buyers or the sellers have become exhausted in a current trend and price is likely to have a reversal. So CVD divergences, cumulative volume delta divergences, also work in the same fashion. They create, it's just measuring in a different way. It is measuring the volume in a current candlestick at any given time. So if you have your cursor along a certain place, like right here, we have a CVD divergence mapped out between these two levels, right? Price from this level created a higher high. If we were to go here with our cursor, follow that vertical line down, we can see we have a bullish delta, meaning that in that candlestick, there was a lot more bullish volume and participation, whether it be by limit orders or market orders, than there were bearish participants. And now moving over to here, we see that we have created a lower low on the CVD histogram. That's vertical bars, both showing bearish price at volume or bullish volume. Down here is also a CVD chart, except this is marking on a 21-day average period, so this one is a lot more aggressive in its reactions. This one is on a 240-day period, so it moves slower and it is resembling it, the volume in candlesticks. This doesn't tell me divergences. I just need to recognize them with my own eyes. So, but we have formed a lower histogram candle than over here, but price is showing a higher high. So that is a sign that bullish participants are growing weak and they are running out of steam, and that we can now begin to monitor for shorts back to the point of control. Price is very likely to always want to find balance and seek efficiency. So the point of control is always a great area to target. In this case, I can almost guarantee with this huge low volume node resting right here that pairs up with these fair value gaps. And that again, if you're not familiar with volume profiles, go back and watch that video. We have right here, these are areas of interest for participation from institutional traders or big money. When we have such stacked confluences like this rejection block, volume weighted average price, 30-minute bullish fair value gap, value area low, all resting right here. And if I was to go ahead and mark out my pivots, what do we have? It lines up perfectly to show that price is likely to mitigate this gap and continue higher through the overnight session into tomorrow. This is an area of interest to now be paying attention and wait and see if we've got our first hat tip, right, from that CVD divergence, and we've created new all-time highs. We could continue farther, but we've gotten our first hat tip. My entry model requires a CVD divergence, a delta divergence at a key level. It can't just be anywhere, so it's got to be at a key level, which we are. CVD divergence, then a delta divergence on the volume footprint. I use volume footprint candlesticks when I am now entertaining entries. And we're going to go over to what a delta divergence is. So I want to see CVD first or delta, either one. Those don't matter. They can come in any direction, but I do need them both. I want to see a delta divergence, meaning each candle, again, hovering our cursor over the candlestick, we can see our vertical line coming down, and the primary area to pay attention to in this box on the right, you'll see it labeled. This is the volume, total participation within that candlestick. This is the delta, meaning if we have, say, in a scenario that there was only 1,000 shares being sold, if there was, say, 700 buyers, but there was only 300 sellers, that means the difference between the two, between 3 and 7, the delta would be a green 400. There was 400 more bullish orders present than there was bearish orders present, and that works in both directions. So a delta divergence would be like this. We see a bearish candle with a green divergence for the delta, meaning there was more bullish participants in this bearish candle than there were sellers or shorts, people taking short positions. So in that case, this is an indicator that price isn't done yet, and we are likely to continue higher. We have already gotten a bearish delta divergence though as well, but it lost steam immediately. So it's, again, a hat tip that we are almost there. We've now got a CVD divergence. We have gotten 2 delta divergences right here and right here. So buyers are getting tired. Now the next thing that we would need to see for entry confirmation, and this would be awesome because we actually might have ourselves we might have ourselves a trade to take live. I would wait for my next confluence is on the, you'll see these highlighted areas sticking off of candles means these are imbalances. Each one of these is a tick level. So 25 cents is what these represent. Each one of these on the depth of market, and at these specific levels, there was 3 times the amount of buyers than there were sellers at each one of these tick levels. So this is a huge bullish imbalance. So I want to see a CVD divergence first, or a delta divergence, paired with a delta divergence, doesn't matter the order. And then I want to see a candlestick in the opposing direction close with at least 5 levels of imbalance, which we have here, right? I also want to see this yellow line represents the point of control within that candlestick. On each candlestick in the volume footprint, we also have a value area low and a value area high. I want to see this candle close and hold these imbalances and close below the point of control. That now tells me order flow has flipped. The short sellers have taken control, and buy side liquidity has become exhausted. The bull run is most likely over. We don't know that until we see this candle close, the next one open. The next one will most likely open bullish whenever you see this, because you will have retail traders hopping in to buy the dip. So I wait for the next candle to see, and it can be a fake out. Sometimes it doesn't play out. That's why it's important that we wait until the candle closes. You wait for the candle to close, then you want to see the next candle open. Usually have a green delta. If we're hunting shorts, it will most likely open, be short-term bullish for a second, and then once that delta flips red, and we want to see this, I refer to as a sell pad. This would be a buy pad. All right. We would want to see the sell pad get respected. Any shorts before meeting all of those confluences would not be valid trades to me. Trading against a leg this strong too in a short position is not recommended, although this is how the market runs. This is how a lot of institutional participants are playing the game. When you are getting stop rated on your longs because of a large short candle that moves violently, because people are aware of, they don't have these exact models. This is mine, but it's very similar in trading habits to what a lot of them will use. And I try to hop passenger in the vehicle when large key players are driving. I don't want to take guesses. I used to trade inversions, and those are great. A lot of people find success trading inversions. So like I said, we opened up green delta. This flips bearish. I'm up really good on my day today. So we remained with a green delta even when it was. Let me see. I don't really want to risk a boatload of money here. See, and we disrespected this buy pad. So this trade idea is no longer valid to me. Even though it could pan out, there is a really good chance this could still pan out if this delta flips. Initially, I would like to have my stop loss at the top of the buy pad. And I would like to, or sell pad in this case, say we hypothetically found a bullish CVD divergence and a bullish delta divergence, and now we were hunting longs, right? So let's make believe. What I would want to see on this candle is that candle close. My entry would be somewhere over there. My stop loss would be at the base of this buy pad. I would want to see price dig into the buy pad, but respect it. And then more bullish participants step in. Once they step in and flip that delta to say it was a red delta, I want to see it flip bullish. As soon as I see it flip bullish, I would also become a participant with my stop at the buy pad, and I would target a key level. You could target wherever, the next pivot or the next area of interest. This trade idea very, very well could still play out. But again, with this huge expansion tonight, I had a really good day today, making 2,500 on the day. I'm very satisfied. I will most likely sit out until New York tomorrow. Excuse me. Another thing to pay attention to if you struggle to trade Asian session, right at 8:30, there are key reversals. So tonight, we are obviously ripping, but those are areas of time to pay attention to. Let me go back to regular candlesticks from volume footprint. If you have a premium subscription on TradingView, you can also use volume footprint candles, and I favorite them to keep them right up top here so I can just very quickly rotate in between the candles that I use. I like this indicator for aggressor bubbles too. A lot of people will talk crap because they like heat maps that come with Bookmap, or they like to use SATA or Sierra charts. All of these are phenomenal order flow tools. That Sierra charts is the primary preferred one by institutional traders. But like I said, I'm a professional retail trader. I don't need Sierra charts. I'm not trading with $1 million every day. I'm out here trying to make a couple grand, and I'm good. And rhythmic data is faster. It has lower latency. It has about a second, roughly 1 second or 1.2 seconds in latency. Tradeovate has about 1.2 seconds in latency compared to rhythmic data. Although I'm not trading with $1 million position, so 1 second of slippage for me isn't $50,000 or something like that. It could only be $20 or $50. I'm not really sweating it. TradingView, I like a lot. I've used it for years. I like the charting on it. I think it's very clear and clean. It's my type of software. So this is my live account that's open right now. I have a 25K live account with Take Profit Trader that I use as my leader. My leader account, I use Trade Syncer as my copier, and my other funded accounts are with Tradeify. So in this case, I'm going to sit this one out, but price is likely to either reject the volume value area high or return to the volume weighted average price. If we were to go and put this entire bullish price leg inside of our screen from low to high so that we could have the volume weighted average price adjust, we are most likely going to return down to these areas paired with the value area low. Great target. Right? So targeting this gap or so on and so forth. I like targeting the point of control because the trade plays out far more. So this is my first. I use session volume profiles, right? Now when I'm looking at a specific session, I set up another fixed range profile, and I want to map out the first 15 minutes or 30 minutes of price action. So now this is going to collect the volume profile of the session. So we have value area high, value area low, and the point of control. This right here on the volume profile is where price is considered at fair value. Excuse me, I'm sorry. So here on the volume footprint, if I was on the 30-second chart, which I generally take entries off of, I would have most likely hopped in this. But like I said, when we open and expand 300 points in a single 30-minute period prior to a session open, it tells me the night's going to be most likely choppy. We've expanded. I wouldn't be surprised. Excuse me. If we are relatively range bound. But a lot of the move has happened, and that I've seen through experience are not my optimal trading conditions. But here we are respecting buy pads, right? So I had mentioned earlier that my stop, had I taken this trade, I would have been monitoring on the 30-second chart. And if you join us in the Discord, you can hop in there with me every day, and I will walk you through and pretty much call out where price is likely to go. And we watch it unfold all the time. Today I had a 4-hour trade I made in my live account, $700 off of risking about 100. So, or it was like $1.50 or something like that. But it was just shy of a 4R. And here we have CVD divergence at the high. Had already known this was an area of interest. We were at a pivot in the value area high within the current session's volume profile. So we already had interest to find. We saw our CVD divergence. Now we zoom into a lower time frame, and in here we already had a higher time. Right here we have a delta divergence, and then I would have taken entry off of, boom, this candle distributes. It closed below the point of control. We were looking at a higher time frame candle. My entries will be pretty rapid on lower time frames. I would have seen this candle open. You notice the tiny nose of a wick popping out at the top of that 30-second candle. I would have seen as soon as that delta went from green, because we wicked up a little bit, it opened with a green delta. As soon as it flipped to red, I would have entered. So say my entry, I got filled somewhere like over here, right? My stop loss would have been over here, a 6.25 point stop loss. Very, very little, right? Now, I would be targeting a 6.32R. I would have already gotten break even on this, because when this candle opens like this, I wouldn't have gotten break even. I would have closed with very little gains. So when this candle, when we have this big of a bullish price leg, if I had taken this entry, I would be relatively tightly trailing my stop, because I don't think it would be clean price action. It's not going to be a clean flush. There's obviously a ton of bullish participants, and they're going to play tug of war to get us down to our draw. So I would have seen this candle punch all of these. My entry was here. As soon as this candle had punched all of these imbalances, I would have moved to break even, because I would have said, all right, I don't want price to disrespect this sell pad. If we tap back into this and we don't have bearish participants show back up, I would be done. So we came back up, we respected that sell pad, and then we chose to dig a little deeper. So now my trailed stop would have moved to here, or top of candle, or this point of control on this bearish candle, wherever it may be. Most likely, being honest, I would have sat here, and that's okay. That's not a great trade at all. That's technically negative R. I don't have a negative R on my analytics. If you go ahead and look, I average in between a 65 and a 70% win rate, or a 75% win rate at times. And I will usually have around a 3R average on my trades. I get a lot of break evens with this trading model, because that's just how it is. But I avoid and mitigate a lot of losses. I don't sit with a 25 or a 30 point stop loss and hope. So I would have been provided, though, an additional entry opportunity. So I would have gotten stopped out over here with light gains, and I would have said no big deal. Now, if we came up here, there isn't a clean entry, okay? There isn't at least 5 levels of imbalance. We still see there is 1, 2, 3, 4, 5, but I want to see 5 grouped together. That's a heavy level of participation. So on my volume footprint candlesticks, if you choose to use these, I will show you my settings. These are my settings. You can go ahead and pause and add these. I have a 400% imbalance. Actually, so that's showing 4 times the participation, not 3. 400% imbalance, 5 levels, and that's what's highlighting, right? And it will extend blue highlighted areas for bullish bipads or highlighted groups, and black for bearish sell pads or grouped areas of imbalance. We have unfinished auctions as well, okay? Those are 2 other highlighted areas that I'm going to point out. See right here, this is a green one. This is a bullish unfinished auction. This is a bearish unfinished auction. These become areas where you see price reaching right back up into that. That's because there's a lot of clustered limit orders resting in that area. And during the time that the auction was filling the orders for participants, it took off so quickly that we didn't finish the auction. So now there's still limit orders resting at these highlighted areas. So price a lot of times tries to reach back up for these. And essentially, I think it's a rich boys club that they are taking care of their buddies, making sure they get their positions. So either way, where is price going right now, right? We're heading right down to that point of control. And I'm willing to bet that we're going to go there, and it's a good trade, but I'm fine with not taking it. No big deal. In a hypothetical scenario, if I had left risk on all the way up here, we would be catching a monster move right now. I would have already trailed my stops to at least here at this point. But I like to trail my stop. Some people will talk crap and say that, you shouldn't take partials or this and that. And it's, what's your reasoning, really? At the end of the day, my goal is to make money out of the market and not give it back to the market. That's what I'm here for. So I don't believe in the whole kind of thought process of not trailing your stops. I don't think you need to be trailing so tight that you're at risk of getting punched out every 2 seconds. But if you're at risk of giving money back to the market, why wouldn't you want to mitigate that risk and capture your gains? You might not make it to. A lot of times when I'm trailing my stop, a lot of IFVG traders or SMC traders who don't actually see what's going on with the auction behind the scenes instantly assume a 1-to-1 is the target. You should always just go for a 1-to-1 or a 2-to-1. And a lot of times I catch, like today, I caught a 4R. Last night, me and one of the gentlemen in the Discord, we were going over some price action, and I had my son come into the room right at the same time that I would have taken my entry. I had my 5 levels of imbalance. I was monitoring it, and I have 3 little kids. So one of my son had run into the room and was pulling on me and messing with my desk, and I'd gotten distracted. And at that time, we had already distributed farther away than I would have liked for me to take an entry, and I missed out on a 14R trade. And this model, it's been forward tested, and you can hop in the Discord and witness for yourself. I had mentioned that we were going to either tag this value area high or come down to that point of control. And we are going to go to the point of control. Look at the POC. This is gold. This is it. So, ladies and gentlemen, I really hope you guys join the Discord. I'm going to hang out until this hits the point of control, because that's the reasoning behind the name of everything. And again, I want to help everyone as traders become better traders and profitable. And if you're doing this on the side, great. If you want to turn this into an income and a job, fantastic. It can be done. It requires tons of discipline and risk management. If you're not a disciplined person and you like gambling, this probably isn't for you. I don't like gambling. I've been to a casino once, and that was for a bachelor party. I spent $200 and I felt like an idiot after the house took my money, because the house always wins. So right here, I would entertain closing my position, but I would probably just put it at this high. This could very well get disrespected. I'm very confident that price is going to return to this point of control. I'm also very confident that price is going to make it all the way to, I deleted those. Where did I put those two areas of interest? Here. I think we're going to trend down here. But all we need to be incredibly profitable traders is this. Where's it going? It's going right to the point of control. It happens over and over and over and over. To an extent, you need to be dynamic, because you can't just use a fixed mechanical model. That's why so many fixed mechanical models just fail repeatedly, because it's an auction. It's order flow. It doesn't ever print perfectly. Boom, that would have been just about full TP we will hit. That's where it's going. So say we did as I had initially said, entered here, stop on the sell pad, target being the point of control. You get almost a 9R. So you tell me if the focus should be on 1-to-1s for IFVGs or things like 9R trades with a 5-point stop loss. All that means is that you can take, if you're risking 1%, say this is a $25,000 live account with TPT, Take Profit Trader. I like to risk 0.5% per trade, so that if one fails on me, I always have room to go back and take another trade. I'd be lying if I told you I don't get stopped out. It happens. In our Discord this morning with me and a gentleman that's in there, my first trade failed and I had lost about $150 or something like that. It was really not a big deal. And then I hit a banger and I ended the day in $2,500 in profit. So that's why I like to risk 0.5% per trade, because it leaves me room to go back in. Because we're not always perfect here. Things don't always happen like magic. But right here, even at 0.5% risk, I would be closing with a little over $1,000.53, risking 123. I would have been in break even pretty freaking quickly. In a perfect world, this wouldn't have retraced like this. But because there's such a big bullish price leg, even if you wanted to play it super safe, you could have gone up here, even at risking 0.5, and done, say, 6 micros. You're at roughly the same amount of risk, $500 play. I'm copying that across 3 accounts. My other 2 accounts are 50K accounts, so I have them doubling the position size that I take on my leader account. So I would have hit for 500 here, and then another 1,000 on each of those accounts. This would be another $2,500 trade. If I had gone full 1% risk, back to 13, or no, that would have been 12, just shy of $250. This would have been 1,000 in this one. I mean, there we go. Full TP at the point of control. Boom. This is how the big boys play. So if we were to do that, that would have been 972 in my live account, and then we would have also hit for an additional $2,000 in each one of the funded accounts. And I think it's phenomenal that, like, I'm also striving. I see a lot of traders that have 30 accounts and they're hitting 1-to-1s, and like that's awesome. Like, you're making a ton of money. You absolutely are. When you're copy trading across 30 accounts and you're hitting one to ones, that's great. Big money regardless. You could hit very, excuse me. You could hit very small trades and you could totally smash TP on a very small trade, have it copied across 30 accounts, and be a big winner. But imagine how large of a winner you would be if you were regularly taking home 3, 4R, 9R, 10R, all these types of trades, because we see price expand and return to the point of control because it's trying to balance itself. And where is it realistically going? I don't know if it's coming down here tonight. We could reject this POC or go down to the value area low, and London session could manipulate higher, and New York could distribute to these levels. Or London session could continue to deep dig down to these levels. Ignore all these. It essentially forms a heat map for you. But I'm telling you, we're coming back to this. Mark my words. So I really encourage you all to, anyone who watches this, to please join into the Discord. I want nothing from you. I'm just trying to help you guys. I charge absolutely nothing. There's about like 20 or 25 members in there right now. And I want to help you improve your trading, and I want to create a group full of beasts. And anybody who's in there that's a strong participant from the beginning, eventually when we have, over 100 members or something like that, the only thing that will change is I'm going to ask $30, a dollar a day from anyone who wants to live trade with me. And if you live trade with me, you'll make the money to pay the $30. It's really not a big deal. I want to be offered the cheapest Discord available to help people get educated, because my goal isn't to make my living off of the Discord. I don't need to. I trade for a living. I notice there are a ton of Discord groups that I don't think that the owners of the Discords are super profitable in trading, and they thoroughly rely on charging numbers like $150 per person for a membership to a Discord. And if you do the math, and you won't see them taking payouts. You won't see them they don't have a live account. They clearly aren't disciplined. If a prop firm hasn't given them a live account, I wouldn't necessarily trust them to be a mentor. The goal, if you end up in a position that you have a live account, that's because you're incredibly disciplined. A prop firm has viewed you trading on that account for a couple months, and you have been used discretion, and you are proper risk management and taking great trades, and they have analyzed you and said, hey, this is a person that we want to invest in. So for people who don't have money, I didn't have money to put up $25,000 to start day trading with. You can use prop firms as a bridge to unlock capital, but you need discipline, you need rules, you essentially need a mentor. This was a couple year process for me, and I learned all this independently. I cherry picked info from tons of traders across the industry. I initially started with, ICT and TJR and PB Blake, and they're all great traders. I'm not knocking anybody. I'm just saying their trading styles are different. And then you look at people like Fabio Valentini, one of the best scalpers in the world, and you don't become one of the best scalpers in the world and win the cup multiple times by not understanding the engineering of the market. And this is, I've really combined a lot of stuff that I've learned from Fabio Valentini and other traders who are similar to him, trading with order flow and volume profiles with SMC concepts. And it has really unlocked doors for me. I'm now working from home, and I have 3 kids, and this is fantastic. Me and my wife are so happy, and I get to focus on my family. That's great. But this is not a coincidence, okay? If you were in this trade targeting these lows or these lows because you're just like, oh, that's low resistance liquidity. There's a good chance you're going to hit. There is. But there's also a really good chance you're not seeing these bullish CVD divergences. You don't even know that we're sitting at the point of control. And this is a high likelihood area of reversal. And so when you're constantly in these trades, wondering why your trade idea is getting stop rated, or your model's not working anymore, it's because you don't understand how the market actually moves. No one completely does, but I'll tell you what, you can get a great grasp on it, and you can have a lot of successful trades, enough to keep you chugging. My goal is, I right now have $125,000 in trading capital funded to me. I'm going to end this year with $1 million. That's my goal entirely. I'm doing $2,500 days on 3 accounts. By the end of the year, if I 10x this and I have 30, you do the math. It's this can be an incredibly life-changing thing if you put the time into it. I've changed my life for sure. I'm not Moneybags McGee over here driving a Porsche. I got a big family. We got another baby on the way, and I got a lot of stuff going on. But I'm very confident, and I can guarantee you that I'm going to be very, very successful doing this with an incredibly low overhead. My overhead's my internet bills. I don't have to pay employees. I don't have to. And futures is fantastic. You don't have capital gains tax. It has its own tax rate, which compares completely to just your general income tax. You're going to pay right around 30% on your income on futures. So it's no different than a job, except it can be a very high paying job if you are disciplined. So it's all about having rules to follow, a successful model that consistently plays out, not getting greedy. You got to know how to read the market, what it's going to do, when it's going to do it, be ready for it. And, I just called this out completely. So either way, I'm going to end this. Join up in the Discord. Definitely check out my other videos. Please give me any suggestions in either the comments section. Like and subscribe. I got to start saying that. Like and subscribe, please. Help a guy out. And feel free to hop in that Discord, comment on this video, whatever you want. I'm here to help you. If you tell me that you want me to cover a topic more in depth, I would be thrilled to. If you hop in the Discord and you want some one-on-one attention, I'm a super easygoing, generous guy. You will get that from me. We can jump in a voice channel, and I will have a one-on-one with you just to help you level up your trading. So either way, I hope to see you guys there. Thank you very much if you made it to the end of this video,